Hello everyone and welcome to today's daily report market videos with me, Richard Perry, market analyst at Hantec Markets on Payrolls Friday the 5th of July. Now, moving into Payrolls Friday, we have a slight rebound on the dollar today. There was a complete consolidation yesterday. The markets basically went to sleep. It was Independence Day in the States and there was pretty much zero reaction on markets whatsoever. The tiny ranges on euro dollar, tiny ranges on dollar yen. A little bit more of a directional move as markets have sort of re-engaged a little bit this morning. A little bit of an uptick on the trade-weighted dollar. There we've got yields which are edging a little bit higher. And this comes ahead of this payrolls report today, which I believe is going to be a crucial payrolls report. I think it's going to be really important because of how the market really views Fed expectations for a July rate cut. Possibility of even 50 basis points, some talking about. I don't think they're going to get 50. Now, the Fed, or the rate cut for the Fed is entirely priced in for July. So, say for example, if you get a strong payrolls report, above 160 on the headline, 3.2% earnings, that's not bad at all. So if you get a strong payrolls report, then what does that do for July rate cut expectations? Sorry, I think it does lead it to question. I mean, does the Fed have to cut rates in July? I mean, that would be the issue that traders would have to then grapple. You'd likely see a significant reaction, I think, on Treasury yields, for example. Big reaction, I think, you'd see through the Treasury yields pulling higher. You'd then also see the dollar really pulling higher as well, regaining lost ground. And I think that there would also be, lo and behold, a correction on equity markets. We've seen the S&P 500 on Wednesday closing at all-time highs. Now that close at all-time highs is coming as the market is expecting the Fed to go ahead with its rate cuts. Now, if payrolls report comes in strongly, does that then question the prospect of rate cuts? So then would equity markets start to fall away again? That would be the issue. So this is a really important payrolls report today, and the markets are setting up possibly in light of the fact that it may have sort of gone a little bit too far. That dollar regaining about 0.2%, pretty much across the board, across the Forex majors. You've also seen gold, which has been all over the place in the last couple of weeks. Really strong, volatile, intraday, big daily ranges. And I think we could see, again, another big reaction on gold today if we see a positive surprise in this payrolls report. So watch out for that. In terms of oil, as I said yesterday, has rebounded to that downtrend, rebounded to resistance overhead around $60 mark, and fallen away. And again this morning, WTI is just starting to pull lower, below 56, and that really does, I think, re-engage what is potentially a renewed corrective move. So that's another market that we need to watch out for. But as I said, payrolls is crucial today in terms of data. Now, in terms of my chart of the day, Euro Swissy is interesting because you've had the euro, which has been under pressure in recent trading sessions, but also the Swiss franc, which is seen as a safe haven play. So what we've seen is that Euro Swissy lower over the last couple of months, and that has formed a downtrend. But also look at this, that break of this trading range between 111.60 to 111.80 is the big floor, all those big lows in recent months. And obviously the highs around 115, but those lows, 111.60 to 111.80, those lows got broken in mid-June, retraced to that overhead supply, which then formed the basis of resistance. So subsequently, these rallies, I think, are a chance to sell. Any strength on Euro Swissy is likely to be seen as a chance to sell. You look at these momentum indicators, RSI failing around the 50 mark. Actually the mid-40s. Those MACD lines have never really got going in this rebound move. And we've seen the MACD lines just sort of dissipating slightly. Similar sort of story with the stochastics as well. So this rally, I think, is a chance to sell. And I think if you get a move below 111.05, which is this week's low, certainly on a closing basis, I think that could re-engage the selling pressure. You'd be down below all these moving averages again on the hourly. You'd be sort of seeing another move lower, whereby the MACD lines are failing at neutral on the hourly chart as well. The RSI failing around the mid-50s. So it really does look as though rallies are being seen as a chance to sell. You could argue there's a pivot resistance around 111.30, 111.35, 111.40 area, pivot resistance. So that is in place now. So as I said, a move below 111.05 opens the downside again. You're looking at 110.80, and then the lows around 110.60 coming into play. So really is an important phase, I think, for Euro Swissy as well. So with that in mind, I wish you good luck in your trading today for Payrolls Friday. Please join me for my webinar. You can sign up on our website, and I will speak to you soon.